Intel is scheduled to report quarterly financial results on January 30th, 2025, and investors are asking if they should buy Intel stock before the company announces these results. Of course, Intel stock has underperformed in the last year, and investors are looking at the change in leadership as a potential catalyst to lift shares of this troubled semiconductor stock. I'll answer the question if you should buy the stock before earnings. I'll also preview what investors should look out for from the company when it announces these results. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in the latest quarterly update, Intel took a $3.1 billion impairment charge as it makes significant progress on plans to deliver $10 billion in cost reductions in 2025. The previous management team was forecasting fourth-quarter revenue of $13.8 billion at the midpoint, which would only be a slight increase from the $13.3 billion it reported in the third quarter. The company forecasting continued losses on the bottom line, with earnings per share forecasted at negative 24 cents. The previous CEO, who was forced out, Pat Gelsinger, said that the momentum they are building across their product portfolio to maximize the value of the x86 franchise, combined with strong interest in the Intel 18A, is attracting from foundry customers, reflects the impact of our actions and the opportunities ahead. The former CEO, Gelsinger, had implemented an ambitious capital expenditure plan that had the company spending tens of billions of dollars to expand manufacturing, add a new business segment in its foundry, and catch up to technology leadership in the semiconductor industry. The CEO was forced out before his plans can come to fruition, and question marks remain about what the new management team is going to do. Are they going to continue those strategies put in place by the former CEO, or are they going to change course? There's been rumors, including this morning, that Intel could be an acquisition target, not just for parts of the business, which was previously rumored that they would sell either the manufacturing side of the business or the design part of the business, but the whole business is now rumored to be up for sale. So management is going to have to answer these questions from Wall Street analysts in the upcoming quarterly conference call and provide that information that investors so desperately seek. So in the previous quarter, revenues of $13.3 billion were down 6% year over year, and the operating margin collapsed, most notably due to the non-cash shareholder write-down. What has troubled the business most significantly financially is the outsized capital investments. So the number you see on top is cash flow generated by operating activities, and this is for the 9 months that ended in its most recent report, and you get the most recent 9 months here with the $5.1 billion, and the $6.8 billion is the cash flow they generated in the same time last year. But what's troubling is that they spent in those same 2 years, or those same 2 9-month periods, $19 billion and $18 billion in additions to property, plant, and equipment. So these are most notably the manufacturing facilities, the upgrades to the manufacturing, the equipment in the manufacturing facilities. And you can see the numbers of investment are roughly 3 times that of the cash flow the company is generating. So they're spending way more money than they were generating, and that forced financial trouble on the company and forced them to pause their dividend. Now, this is what Pat Gelsinger told the board of directors before they hired him for this job. He said, "This is what I'm going to do. If you want to hire me for this role as the CEO, this is my plan, is to invest aggressively because Intel is behind the curve and we're losing market share. We need to invest to catch up." And the board of directors was on board with the CEO's plans. But just a couple of months ago, or just, you can think of it as, a couple of weeks, they forced the CEO out. And so investors and shareholders were questioning the board of directors and their decision making. What are they thinking here? The former CEO told you that this is what he was going to do, and you were on board with the plan. And before the plan had time to come to fruition, this is a multi-year investment cycle. This isn't something that you're going to invest in and reap the benefits in the same year. This is a multi-year investment process. And there was about a year or two left before they were going to start to reap the benefits of these investments. Before that had a chance to come to fruition, the CEO was forced out. And shareholders were not happy about this. Shareholders felt like Pat Gelsinger was a great fit for this role as CEO for Intel, very qualified, and some have argued more qualified than anyone on the board of directors, making the decision to oust this CEO. So now there's pressure from shareholders, and these rumors that you're hearing about selling parts of the business, selling all of the business, it could be because shareholders are fed up and investors are fed up with Intel's management, Intel's board of directors, and they want the company to change hands. They want the company to change hands to a more competent management team, to a better operating team, to a team that they feel can steward this company in a better direction. Now, that remains to be seen. I don't know if you're going to hear more about that in the earnings call, but I know that's on top of the investor minds when the company announces results. So Intel, all of its price declines are now bringing the stock down to the cheapest valuation it's been trading at in a very long time. It's trading at a forward price to earnings of just 12, which is very cheap, but it does come with elevated risks. I've also done a discounted cash flow valuation model for Intel. I did that on December 30th. The numbers are still relevant. The intrinsic value per share I came up with was $36 for Intel stock. It's now trading, even after the burst today, following the rumors of a sale, it was up 8% today. The market price at $21 still suggests that it's undervalued. Now, I've had Intel stock rated as a buy all year long and perhaps longer than a year. And of course, I'm disappointed by the results. It's down significantly in the last year. But I revisited this stock today, revisited my valuations, and I'm reiterating my buy recommendation for Intel stocks. Now, should you buy before or after earnings? This is a risky stock to begin with. And then on top of that, you're adding the added risks of earnings releases. So the risks are multiplied here. Now, while I do feel the stock is undervalued, I don't suggest investors putting all of their allocation and buying ahead of earnings. If you want to own Intel stock and you're wondering before or after, I would suggest doing half before earnings and half after earnings. That way you reduce some of that downside risk from Intel stock post earnings. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.